Is the bull market over for crypto? Has Bitcoin topped out? And are we about to see the bear market developing? In this video, I'll explain why I believe none of that is the case. Let's get into it and let's run the numbers. Inside the crypto market, there are three phases of price action. First is the bull market psychology, then comes the bear market, and then comes consolidation. This occurs around the halvings, and we've seen the 2012 halving cycle, the 2016 halving cycle, the 2020 halving cycle, and we're currently in the 2024 halving cycle. The bull market for the 2024 halving cycle is expected to extend into next year. Now, there's a couple of things that are really important to understand when it comes to analyzing crypto. Bitcoin causes all other cryptos to move directionally. If Bitcoin is coming up, all the other cryptos are coming up. If Bitcoin is coming down, all the other cryptos are coming down. One thing that people get really confused on: when you have a bull market, it doesn't mean only up. You can have a bull market and see terrible retracements, and economic volatility is a thing that impacts Bitcoin. What we're seeing right now, we're just up here. I just want to pull your attention to this particular period of price. This is back in October of 2013. This was a US government shutdown. When the US government shutdowns occur, they typically push price down, and that's what we've been seeing recently. A lot of people expect that Bitcoin will just go bananas. It will go into the banana zone. But these economic impacts are real, and they affect all charts. Personally, I'm seeing everything as a buying opportunity right now. We buy in the red and we sell on green. That's BORSOG. Buy on red, sell on green. Now, there's a couple of things that I want to just take you across. Inside the service, which is our elite private community, I talk about forward projections. Now, when we look at Bitcoin and how it's going to fare out across the next couple of years, actually across to 2030, so the next 4 years, we're expecting a lengthening cycle and then a retracement. Consolidation will be where most of the gains occur in Bitcoin's next cycle. With mathematics, we can do incredible things, and the bull market will of course go up, but if people are called into the bull market, there is a lot of initial turbulence. We can see big sell-offs after the halving. A lot of people only come in on the bull markets post-halving. Now, this way of doing things will no longer work inside the crypto market. You must stick with it. Inside bull markets, we can see that there's always been very large sell-offs. They don't look like much, but they are really, really big. We always get sell-offs inside bull markets, and bull markets climb a wall of worry. Now, there are big differences between the 2012 halving cycle, the 2016 halving cycle, the 2020 halving cycle, and this current halving cycle, which is the 2024 halving cycle. The 2024 halving cycle has what we always wanted it to have. It has institutional and global adoption. In terms of innovation theory, basically Bitcoin was just residing on people's computers. People were mining Bitcoin on their home PCs. And a lot of the development and a lot of the adoption came out of China. And when the Chinese authorities cracked down on Bitcoin and outlawed it and did all sorts of things, we saw a big pull down in the 2020 halving cycle. And then the global arms race for crypto began. Now we have global adoption. We have different cycles. They, of course, are lengthening. I'd like to draw your attention to the consolidation phase of all of the different cycles. Consolidation is where all the magic happens. What basically occurs inside any market, tourists are called in when price goes crazy. They say it's a sure thing I can't lose. And unfortunately, those people tend to buy around the top and get stuck with something that goes down substantially. We see it all the time. We see it in oil, we see it in crypto, we see it in gold, silver, you name it, it's always there. And of course, it's inside the stock market as well. This raises a really important point. Here I've overlaid gold on Bitcoin. You can see as Bitcoin comes up and gold is coming up as well. When gold finds a local top and starts to reduce in price, we often get these parabolic uptakes inside the crypto market. And gold has been going utterly and absolutely nuts. And we've seen just recently a little bit of a retracement on gold. It's going to take some time for this transition to occur from gold into crypto. But it's highly net positive for crypto and Bitcoin. That cycling out, or the money transferring from one market to another market, is what markets are literally all about. If we just zoom in a little bit more, you can see as gold came up and then started to just come down, we had a bit of a blow up in terms of Bitcoin. It didn't happen instantaneously, but as gold started to come up, Bitcoin started to come down. Now, there is a lot more to Bitcoin than just gold. And we've also seen recently gold was under enormous upside pressure and momentum, and Bitcoin stalled out. When we look at other models, such as the stock to flow model, we can see that we're just in this period of time. This period of time can get really turbulent, but when you look at the stock to flow model, we have the anticipation of going much, much higher. Bitcoin as a market is starting to mature. That means past cycles are starting to elongate and to stretch out. The question is the bull market over? Likely, absolutely not. Now, why do I feel so confident about that? The major reason that things aren't over are because of the fourth industrial revolution. Now, what is that? What is that all about? It's literally the intersection of artificial intelligence, robotics, and medical science. This is called Industry 4.0 as well. Across time, the human race has embraced technology, and you can see here the history of technology. We started in the Stone Age, and we're up to the fourth industrial revolution. Each time a major shift in technology occurs, we get explosive growth. Across the next half a decade, we're going to see all of society change in ways that we can't possibly imagine now. This will create new opportunities, and existing industries will feel the pressure as well. And this will also spur growth inside the stock markets globally. It doesn't feel like it, but we're entering a golden age. And it's exactly this technological change which will extend Bitcoin, crypto cycle, and the stock market cycle as well. For this reason, personally, I'm treating every withdrawal in price, every drawdown in price as an absolute gift. Personally, I'm leaning in. There's a lot of discussion about different entities transferring Bitcoin to exchanges and also mega shorts opening. Now, the shorts may be opening, but they typically open at the wrong times. And a lot of people just mistime the market because they're only looking at one market. One thing is really clear. The longs are continuing to accumulate, and the shorts are not that predictive on price. And that's really dangerous for the shorts because the shorts can be absolutely hammered. For example, as price was coming down, the shorts were actually closing in terms of net basis. And then as they basically reached the bottom, the shorts went wild. And they got a little bit of downside action, but nothing in terms of what they hoped. Be very careful and look at yesterday's video about certainty. Certainty is not your friend. Certainty means it's over. This brings us to one final point. When we look at the S&P 500 and overlay it against Bitcoin, we can see a tremendous association. With the fourth industrial revolution opening up new revenue streams and new markets and new everything, earnings for companies are expected to keep on increasing. Now, when we look at this association with the S&P 500 and Bitcoin, so long as the main markets continue on the way up through a net positive. Now, what do I mean by a net positive? Just because we get a reduction in the S&P 500 inside the stock market doesn't mean that it's over. And a lot of people just think that as soon as you get a retracement, it's done, it's dusted, it's 1929, it's the GFC, it's C19, it's the end of the world. No, it's a retracement. Now, why do people feel this way? Because they look at social media, which is emotionally driven. They look at the news, which is also emotionally driven. Financial markets have a very nasty habit of taking people out of the trade at exactly the wrong times. You cannot let your fear be your guide for buying and selling. If you do, you will be consistently losing money. You will actually end up buying on green and selling on red, which is what 95% of people do. It feels right, and that's why people do it. But inside financial markets, you have to invert your thinking. You have to buy on red and sell on green. Instead of being a gambler, you have to turn into literally a farmer. A farmer is not an investor. A farmer puts the seeds into the soil and then watches them grow and then eventually harvests the crop. Can you imagine if a farmer just held like an investor? The crop would get spoiled. You must learn to transform from an investor into a farmer. In order to do that, you must understand how all the world's markets actually move as one. They don't move in perfect synchronization, but they do move together. And you can see here the S&P 500 futures, the NASDAQ futures, the Dow futures, and the Russell futures. They were coming over and down like this. And look at the association with Bitcoin. It is very important to know how to read the weather patterns inside financial markets. Now, how do we do that? Of course, we've looked at the Bitcoin long view forecast model, and where Bitcoin goes, the entire crypto market goes with it. A lot of people think that this is all they need to look at. That's what you're taught. Unfortunately, it is absolutely incorrect. What is far more important is to look at intercorrelation and interconnection. We do that through the cheat sheet, and the free cheat sheet is available from ctksmethod.org. The links are in the description of this video. Now, what we need to do when we're looking through the cheat sheet is to understand, is risk on or risk off? If risk is on, we expect upward price momentum. If we expect upward price momentum inside the stock market, that will translate through to the crypto market going up, as you've just seen. None of this is cherry-picked data. This is all live data that we do on our channel. People are traditionally taught to just invest. Now, investing may sound like a really good idea because, after all, if you don't know what you're doing, just throw the money in and hope and pray. And with enough time, so you're told, everything will be fine. This is simply not the case. When people get into investing, they typically invest at the top of a bull market and they sell around capitulation. You do not want to be an investor. That may sound really bizarre, but you want to be a farmer. You want to plant those seeds at the right time. When do you plant? When it's dark. Are the markets dark right now? You bet they are. This is planting season. Now, how do you know if you're planting on fertile ground or just inside rocks, just literally throwing your money away? You need to look at the structure which underpins the markets. We do that with level 1 and level 2 standard certification. We look at the daily structural models across all of the cheat sheet charts. And then we look through the monthly structural models to understand, are we going positive? Are we going neutral? Are we going negative? This is really important. Just think about it like this. If the monthly structural models keep on going negative, what's happening to the long view forecast model? Well, it's not holding. If that is the case, what is more important, the long view or the monthly? Please let me know in the comments. And this is something that we could do a good deal of discussion on because so many people mess this up. For example, what is more important, the monthly structural model or the daily structural model? That is also a very important thing to discuss. And please let me know your comments because I will discuss this in upcoming videos. You are the reason that Kate and I do these videos. We want you to succeed. You will only succeed based on your knowledge, understanding, and ability to execute. Therefore, when I ask these questions, I'm trying to make sure that people really understand what the priority of charts is actually. And the priority of charts from the retail view, from the tourist view, is absolutely wrong, unfortunately. It will have you acting against your own self-interest time and time and time again. Therefore, when we're looking at the question, is the market over? Is crypto just peaked out? Is the bull run finished? The answer, unequivocally from my perspective, is no. That's because we have lengthening cycles. We have Industry 4.0. We have major economic shifts occurring, which will literally create a golden age. And when we look into retracements inside bull markets, they can be really severe. And if we get a severe pullback inside the crypto market, that is a buying opportunity, no question about it. And remember, we are farmers, we're not investors. The other thing to note, you want to stay in this market no matter what. Being able to handle the negative price action is actually a lot easier than you might think. Upside volatility can be really whipsawing, but downside volatility is actually quite easy to deal with. And literally, our beloved global family was born in the red. And we don't short this, we actually go long and make profits. Another thing to just bear in mind, the CTKS model, which was originally known as the KS model back 5 years ago, was the first crypto model to just apply psychology into the crypto space. We are a small community, but what our theories do just emanate throughout the entire crypto universe. The KS model, which has been updated to the CTKS model, created bull market psychology, bear market psychology, and consolidation. Up till that point, people were confusing bear market psychology with bull market psychology with consolidation psychology. The three couldn't be any different. It's wildly important that you compare apples to apples to apples, pairs to pairs to pairs, for example. And we know that the vast majority of the gains will be made in the consolidation period and not the bull market for the next cycle. So that's something that you hear here first. Of course, the monthly service members already knew this. If you have any questions on this, please let me know. I would be very happy to cover them off in future videos. I would love for you to become part of our global family. All you need to do is smash that like button, subscribe, press the notification bell, and just drop a comment to say hi. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading is a lifelong profession. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that buying lower is the secret to success. You will create security and financial freedom in direct proportion to your capability and willingness to learn. If you commit, your world will improve immediately. I hope you've enjoyed this video, and Kate and I very much look forward to joining you again in the next one. Take care, be kind to yourself, be kind to others, show gratitude and happiness, and you'll already feel richer today. And today is all we ever really have.